Hey, Daniel here, and welcome to my channel. In this video, we're going to be talking about FHA versus conventional loans. Today you're going to learn which is going to be the best loan for you, which loan might save you the most amount of money possible, and then a strategy that I use with a lot of clients to help them make sure that they get the down payment and the rate that they want up front, and then have the best long-term savings over the life of the loan. So let's dive in. When you're shopping for a mortgage, you're going to run into a lot of different options with a home loan. And one of the biggest options that people face is, are they going to go with FHA loan or with a regular conventional loan? And there are a couple of different nuances here. The difference between the two that will help you make a better decision on which one is the right fit for you. So up on the screen here we have FHA versus conventional. So right off the bat, FHA loans normally have a floor of 580 credit score. So FHA loans are better for people with lower to middle credit scores, whereas when you get a higher credit score, conventional is usually going to be the best loan for you. And what I mean by the best loan here is what's going to give you the most savings. If you take a conventional loan with a lower end or a mid credit score, then you're going to have a lot higher rate on the conventional loan than you would have with an FHA loan, because FHA loans are suited more towards low credit to mid credit, whereas conventional loans, normally around 680 range, you're going to start seeing a lot better interest rates. Also, on the FHA side, you have a 3.5% minimum down payment. So if it's a $100,000 house, you have to only put down $3,500 towards the down payment of the property. On conventional loans, sometimes that you can't get a 3% down. Sometimes there are income limits, or you have to be a first-time home buyer. But most of the time, the down payment is actually 5%. So if the down payment's 5% down, it's too much, you can flip over to an FHA loan to get the 3.5% down and save you some money at closing. Also, FHA is going to be more accommodating for people with bankruptcies, foreclosures, share of sales, basically any negative credit event. FHA loans have a shorter time period that you have to wait outside of those dates, whereas conventional loans is going to require you to wait a lot longer, sometimes a double or triple the amount of time, and what's called seasoning, before you can get a loan like that. So if you have negative credit event, it might be worth exploring an FHA option first and then refinance into a conventional loan. Another thing to know, FHA loans are only for primary residents. So if you're going to get an FHA loan, it cannot be an investment property. You have to reside in the property to get an FHA loan. Whereas conventional loans, it can be an investment, it could be a primary residence, it could be a second home. Those occupancy options are a lot more flexible on the conventional side. FHA is also going to be more accommodating if you have a lot of debt. So if you have high monthly debt obligations, FHA might be a better option for you. Usually you could get the debt to income ratio on an FHA loan about 55 to 56% debt to income ratio, whereas a conventional loan, their debt to income ratio normally is going to top out at around 59%, sometimes even lower depending on your credit score. FHA will allow you to ask for up to 6% on the purchase price in seller credits. So the money that you're getting from the seller to pay down closing costs on the conventional side, normally it's 3%, depending on how much money you put down. Though this can change, it could actually ask up to 9%, so talk to your mortgage advisor on what options you may have with seller credits. Most of the time, I've never seen anybody ask for over 6% seller concessions, just because normally you don't need that much. One other thing to note, FHA mortgage insurance is a lot more expensive than on the conventional side. So with FHA, you have two types of mortgage insurance that you're going to have to pay on every loan. You're going to get it charged upfront a mortgage insurance premium that is normally wrapped into the loan, but it's about 1.75% of your loan. So if you're talking about a $100,000 loan, you're going to get charged an extra $1,750 added to your loan that goes directly to FHA. Not only that, you pay the upfront, plus you'll pay mortgage insurance every month. On the conventional side, you don't have to pay upfront mortgage insurance, but you do pay mortgage insurance if you have equity below 20%. So if on the conventional loan, you only put 5% down, you're going to have to wait until you build up 20% equity in the property for your mortgage insurance to fall off. On the FHA side, the mortgage insurance is going to stay on your loan for the life of it unless you put more money down or refinance into a conventional loan. And finally, bottom line is the main differences between these loans. FHA loans are a lot easier to qualify for. They're going to allow you to have more debt, lower credit scores, and they're going to be more lenient on helping you qualify. Conventional loans, though, are going to help you save more money over time if you're well qualified for them. So the issue that people run into is they see how conventional loans are usually better for them, but maybe they don't qualify for the conventional, or in their circumstances, conventional might not be the right fit for them. For instance, sometimes when I talk to people who have lower credit scores and we compare FHA versus conventional, the conventional loan is actually more expensive over a period of time because they're getting charged an incredibly higher interest rate because of their credit score. So you can think of an FHA loan kind of like a stepping stone to getting into a conventional loan. So if right now an FHA loan is the best option for you, or it's the only one that you qualify for, what you can do is talk to your mortgage advisor and ask or see what you need to do to fix or make your credit better to later refinance into a conventional loan. All right, and to finalize, when you get a loan, you don't have to stay with your loan. You know, if you got a loan for 30 years, 15 years, that doesn't mean you have to stay with it. You could always refinance if your circumstances change. Right now, you might have a low credit score, and that might require you getting an FHA loan to secure the property. Do it. I suggest you build equity in that property. Stop making those rent payments and get some appreciation on that property. And maybe down the line in a couple years, you'll build more credit, and then you could refinance into a more of a conventional loan where you could remove that mortgage insurance and cut back on those costs and start saving. Okay, so hopefully this helped you clear up some ideas and get a better understanding of FHA versus conventional. Keep in mind, you don't have to have those loans over the entire term. You can always refinance and get into a better loan if circumstances change. All right, if you have any questions, let me know. And please hit the like button, subscribe, and turn on that notification bell to stay up to date on my new videos. Thank you so much for watching this video. I'll talk to you soon.